The broadcast is now starting. All attendees are in listen-only mode.
Good morning, ladies and gentlemen. How is everybody doing? Can everybody hear and see me? Excellent. I am going to be putting this questioning away, and I am going to start our update. So you can post questions whenever you want. I'm going to try and get to as many as I can. My strong suggestion is to wait until I am done before you ask questions, because I probably will answer your questions. I try to do these as complete as possible. For those questions that I can answer, I will try to get to at the end. But sometimes you guys ask me questions that either I don't understand because you're not using full sentences, or they're just questions I simply can't understand. Sometimes you guys give me too much credit and ask me questions that I simply can't understand. So as long as it's a reasonable question that you fully print out, I'd be glad to answer it if I have enough time at the end of this. So let's get started because we got a lot to cover. So I'm going to put this away. There we go. And here we go. So we're looking at the monthly chart. This is our big picture. Do you see anything that is different that changes our opinion of anything? Absolutely not. I know I don't. In fact, when I look at the MACD, folks, we're pinching right here. So we're just coming right back down to, it's basically pinching. And my expectation is that right there should be the high for the MACD on this monthly chart. It should be the high. Why is that the case? Well, wave 3 of 3 is often where you're going to see the strongest technicals pop up. Whereas wave 5 of 3 is often the longest segment of the move. Wave 3 of 3 is often the strongest, and it gives us the highest readings on our indicators. Therefore, I believe that probably will be the high for the MACD. I think we will flatten out now. And then when we get a higher high for wave 5 of 3 up here, I think it'll probably just be below that prior high. You're going to get a wave 4 thereafter. It's going to put the MACD probably into negative territory on that pullback. And then you're going to get your last divergence up for this 5th wave. That is what I am looking for over the coming year to 2 years. How long this will take, I can't tell you exactly. A while back, I thought we would top, maybe towards the end of 2023. A lot of it is going to depend on how long this wave 4 takes. This wave 2 was absolutely nothing. And the wave 2 of this third was also nothing, and that's why we got the larger wave 4. And if you remember what I said last year, before we even began this 4th wave, I said that we will probably see the largest pullback we have seen since we began this rally in March of 2020, and we have seen that. I think this wave 4 will be even much larger. So I think this wave 4 will probably take this MACD into negative, and then you're going to get a solid negatively diverging top up here in the coming years. Will we end at the end of 2023? Will it push out into 2024? A lot depends on how long this wave 4 takes. Okay, let's move over to the daily chart. The daily chart is literally a work of art. I gotta tell you, absolute freaking work of art. I'm going to go through the bigger structure again, and let's go through it so I can give you guys a very good perspective of where we are. Again, this first wave off the lows here was an almost perfect Fibonacci pinball structure. The ratio between each of the waves, between this wave 3 and 4, and this wave 3 and 4, and then this wave 5, almost perfect Fibonacci pinball structure. It then suggested that, and if you remember here, when everybody said we were topping, I said, no, we got one more rally to go. And we got that rally, and then we got this pullback. But this pullback had 2 issues. The first issue was it was so shallow, unusually shallow. I think that was a 0.236 retracement, unusually shallow. And it was because likely how sold off, oversold we were in the March decline. It really was. So we got a very shallow, and not only very shallow, This wave down here was not a full 5-wave C wave. This is probably more likely a WXY as more appropriate count, but this was an unorthodox bottoming structure. And then it led us to our next move higher. Next move higher from here is supposed to take us between the 382 retrace extension and the 618 extension for wave 1 of wave 3. That's what we did. Another micro, that was an absolute micro pullback, micro pullback, even smaller than this. And from there, and again, also unorthodox wave 2, another unorthodox pullback. From there, I said, well, we now have our bigger wave 1 and 2 in place and our wave 1 and 2 in place. What do we know from there? Well, we know that this wave 3 of this degree takes us to the 1.0 extension to the 1236 extension. Well, isn't that where we topped out? And then where do we go from there? Well, we usually come back and we retest our major market pivot from above. We break through it, come back, retest it. Our market pivot is the 618 to 764 extension. This has to hold. As long as this holds, your next target, the 1618 extension. This has been running an almost perfect fib pinball structure since the lows based upon where our labeling is. And that is why I kept maintaining, folks, we're going higher for this wave 3. We're going higher for this wave 3. Ultimately, we came 60 points. If you remember when we came down, when we topped here, I said we're going to get a pullback ideally to 42.70. That's exactly where we came down to. I said from there, I'm looking for 48.82 minimally. Unfortunately, we came 60 points short of my ideal target on that. And that was probably the first quote-unquote miss we had. We came up about 60 points short. We got 550 points of the expected 610-point rally. We missed the last 60 points. It is what it is. I mean, unfortunately, this is not going to give you a perfect move every single time, but I got to tell you, I haven't seen anything that ever comes anywhere near as close as to what this tells you. This fib pinball structure tells you how the market moves in an impulsive structure as you move through its progression, and it is so damn accurate most of the time. We've now held our major market pivot. Are we going to test that major market pivot one more time? That is what we're struggling with. But as I've been saying so many times, the market is now was more oversold at those bottoms that I, in fact, called it silly oversold. As we were getting that last extension lower, I said, guys, this is already getting silly. We're going to see a very strong rally off this low. I clearly was not certain it was going to be the low, but I kept reiterating, look, we are more oversold than we have been since the bottom in March 2020. And I got to tell you, I was even looking at NASDAQ. NASDAQ was as oversold as it was in March of 2020. So, folks, I kept saying, look, if we start gaining momentum to the upside, we may just blow through and get another unorthodox bottoming. But remember, we still have to develop a 1-2 structure before we can get ready to be uber bullish in wave 5. And we're not there yet. So let's look at the smaller degree and see exactly, can we get another low or not? And that's where this comes in. Now, I've been mentioning this ending diagonal potential structure for quite some time now. Why? Because this is best counted as a 3-wave structure, meaning in diagonals, folks, in standard Fibonacci pinball structures, normally you get 5 waves in wave 1, 5 waves in wave 3, 5 waves in wave 5, and then that's how you get a 5-wave structure. When you get a diagonal, diagonals are 3-wave substructures. What you also see in a diagonal is wave 4 most often, not always, most often comes back into the price territory of wave 1 for overlap. And then you conclude with your 5th wave lower low. There is potential that this is an ending diagonal. And the other reason, besides for this 3-wave structure cueing me off that, is that the initial rally off the lows really look best as a three-wave structure. I'm going to show you how I can count it as a five-wave structure, but look, I usually try to go to the simplest explanation of a structure unless the market forces my hand to go more complex. So right now, unfortunately, the market is forcing me to look at this as a possible ending diagonal. Is it something I am betting heavily on? No. Is it worth taking a flyer on a short? Maybe for some of you. Maybe for some of you, it may be worth taking a flyer on a short because the short could be sizable. So is it worth taking a flyer on the short? Maybe for some of you. What we've learned, we did a poll of our services a number of years ago, and we learned something quite shocking. What we learned was that 70% of our, which are now 8,000 members, are long-term investors, and only 30% or less are actually day traders or lesser swing traders. But the great majority of our members are long-term investors, which is why I have to some extent, focus my analysis more towards them. So at this point in time, folks, for you regressive traders, is it worth a short? Probably. For long-term traders, what is it worth? Maybe you hedge your positions here, but this would be an incredible buying opportunity. As I said here. Now, I'm going to quickly go over my perspective because for those that were in the room, you remember as we were hitting this, as I put it, silly downside extension already, when we were hitting it, I said, I'm buying some stuff here. And I think a number of you caught that. But my reasoning is, whenever I trade or invest, I will usually start scaling into my first position. I'll normally have 3 tranches. My first tranche usually gets bought at the bottom of the third wave of what I think is the C wave, or what I think is the third wave of the C wave. So I'll buy my first position here. My second position comes in here. My third position comes in here. So I'm kind of averaging in this region right here. I'm not trying to go all in one place. I'm not trying to go all out in one place. I raised between 10 to 15% capital here, and I put a little over. This time it was actually, because it got so silly to the downside, it was depending on some portfolios, I put half of it here. Some I put a little more than a third. So right now, guys, I still have money sitting on the side like some of you. So what am I going to do? Well, I'm going to allow the market to give me the opportunity for this. If I don't get it, and if the market does complete a full 5 waves up, folks, then that money is going to go in here. Now, how am I going to know where this is? Well, that's why understanding that the market is fractal in nature and how, waves develop within waves helps you out tremendously. Where is my ideal target for this next rally? My ideal target is 54.93. Great. I know I got that number. Okay. Now, I will then have, once wave 1 is done and we're starting to pull back in wave 2, I now have another piece of the puzzle. I know how large wave 1 is. So in order to identify a 2.0 extension, because a 5-wave structure often targets its 2.0 extension of waves 1 and 2, I now have 2 pieces of the puzzle that can have me identify where wave 2 can be at a high probability. I have to figure out from this wave 1, how far back does wave 2 have to pull back to give me a 2.0 extension at 54.93. And that is how I'm going to come up with a wave 2 pullback target. I'm giving you a little bit of background into how I go about the analysis. Again, it all goes back to the fractal nature of the market. Where waves are self-similar, variably self-similar at all different degrees. So I know everything has to fit in like a puzzle. That's where I'm going to figure out where wave 2 is, assuming we can get back up into this region for wave 1. And if we get a nice corrective pullback into wave 2, folks, that is going to be a very strong buying opportunity. Now, am I going to go leverage long at that point? No. I wait for the next 1, 2 to develop and then break out, and then I start buying leverage position for the heart of a third wave. Until then, I don't touch it. So that is my general plan, and that's how I'm looking at the market right now. Now, the alternative, and again, take a look at the yellow, put it out of your mind, but take a look at the yellow now and then put it out of your mind. I'm putting the yellow on the chart now only because should we get 5 waves up into the here, I do need an alternative. And the only alternative I can come up with, if we do get 5 waves up into this, the only alternative I can come up with is a big flat. And again, won't be my preference if we get 5 up, but I do need an alternative. And the only way I will even consider that alternative as a reasonable probability is if we rally up into this region and then we see a very clear 5-wave decline. That's the only way I will start having my antennas rolling up on the yellow. And that's assuming we get up to here. Remember, if we get up to here, the alt 1, alt 2 turns to green 1, 2. And then the yellow becomes our alternative. Again, until we actually see a clear 5-wave decline off of this, no go. For now, I still am going to give the opportunity to the market to give me an ending diagonal down. Is it foolish? Maybe. I'm not so sure it's so foolish when I look at the IWM. Because the IWM has what, to me, looks like something that has been very, very well positioned in this decline. If you look at this ABC here for this B wave, take note, the B wave was lower than the initial decline, the initial bottom of the A wave, at least the way I have it counted. And what does that tell me? Well, that's called an expanded B wave flat. Look at that here. We may have that for a 4th wave, folks. So if we start seeing the IWM dropping down, and I would follow Mike very closely on this, because if Mike starts telling you you got a 5-wave decline off whatever high we created around here, then you're going to probably get a lower low on the IWM, and that will be a huge gift and buying opportunity. And same thing. Now, the thing about the SPX is going to be a little different. If this really is an ending diagonal, you're not going to start with a 5-wave decline. Because remember, they're going to be 3s. So you're going to start with a 3-wave decline. It's going to look corrective. That's what's going to make the SPX so much more difficult to trade at this point in time. And that's why I'm saying most people probably not to trade this aggressively. Probably best to wait for the next major entry point, either here or here. Okay. I think I belabored this chart a bit much. Let's look at the 5-minute chart. 5-minute chart, again, showing pretty much the same thing. I just wanted to show you how I can possibly count the SPX as having an initial wave 1 as a standard wave 1, a leading diagonal rather than just a corrective. It's a bit of a push, but I'm going to show it to you anyway. This is wave 1, A, B, C, wave 1, wave 2. A, B, C, wave 3, wave 4, A, B, C, wave 5. And it doesn't violate any rules because your 3rd wave is still larger than your 5th wave. So is this possibly a leading diagonal off the lows? The answer is I would never, ever start with that being a leading diagonal off the lows. But is there an interpretation for it? Yes. So a lot's going to depend on how we develop here. Normally, guys, I got standards, and I apply those standards, and that is what keeps us out of trouble the great majority of the time. Sometimes, when you deal with standards, it means you're right 70% of the time. But even with the standards, sometimes you're going to be wrong 30% of the time. That's why I always start buying at the bottom of the 3rd of what I think is a C wave. Because sometimes we're going to get unorthodox structures. And in this case, folks, I kept highlighting, we've had unorthodox pullbacks the entire rally from March of 2020. It would not shock me if we had one this time as well. Is that for certain? No. But that's why I bought at those lows. Okay, I'm moving on to the metals because I got to move quickly now. I only have less than 10 minutes. I'm going to just show you a few of them. I'm not going to go into heavily. Folks, when we had a breakout setup, and I put out that update last week, guys, it's game time, meaning you have to get your game faces on. And if this market was going to break out, it had to do it then. It didn't. The market came right back down through our pivot. And what did I start warning you about? Well, I said something is wrong here, folks. And now that the market has clearly invalidated that structure, I'm now having to resolve back to a bigger pullback in the overall complex. Right now, that is what the market is showing me. And should the GLD break down below this pivot, folks, unless it can break back over the pivot after it breaks down, folks, we're going down to probably the 140 region. That also points towards the 21 region in the GDX, and about, I think also the 20-ish region also in silver. So I'm just telling you, when the, and I'm probably going to put this in one of my updates. When they asked John Maynard Keynes years ago, when he changed one of his prognostications, they asked him, why'd you change your prognostication? His answer was, when the facts change, I change my mind. What do you do, sir? And that's exactly how I look at the market. The market gave us an opportunity to break out. It then invalidated that opportunity. When it came back below the 618, it was a big warning that was happening, and I put that out to you all. Right now, I'm telling you, we've now taken that setup, and now market is telling us, well, we have a potential drop in a bigger pullback to still be seen, even though we've been in this pullback now for a year and a half. It is what it is. I can't help it. I just have to tell you what I'm seeing. And as long as the market respects this box right here, folks, with the 170, 50 or so region on GLD seemingly like has nice confluence with the lower levels that I'm looking at. If we stay below 170, 60, 170, 50, folks, this is a downside structure. When you break below the pivot becomes your resistance. And unless the market does something that invalidates this is what I have to go with. It's what the market is telling me. GDX is a little bit more of a problem because of this structure here doesn't make it look like a standard five-wave structure, a five-wave structure to the downside. But this does look like a five-wave structure. GDX is an absolute mess. The main point you have to take away from this, folks, is until we actually get over this high right here, I can't view the GDX as giving us anything bullish. I'm sorry. I have to remain protected here. And silver is the same way. I don't have the time to actually look at silver at the moment, but silver is the exact same way, folks. I'm going to take a look at the USO. Well, look at that. Okay, this was clearly a fourth wave. That's a fifth. This should, quote unquote, should finally be that last fifth. When we were down here, I said, okay, guys, it's time for a rally. My expectation is we're going to go back to the prior highs. There is some potential we can even go higher and get a new high, even though it's a B wave. Everybody's asking, well, can you get a high? Anybody remember the B wave we got in the S&P 500? Well, allow me to remind you of it. That A, B, C, and that was the largest B wave I've ever seen in relation to the prior highs. In my life, out of all the charts I've ever seen, that is by far the biggest B wave I've ever seen in my life. In this case, this still is very much in the running for a B wave. My alternative still needs a pullback and then another rally, and then you get a deeper pullback. But right now, guys, to me, I think we're topping here. Look at these divergences on this rally. I think we're topping here. Could I be wrong? Of course I could be wrong. I've been wrong before, but I'm just trying to give you what I think is the greater probability, no matter how it looks. It may look crazy, but I'm just going to try and give you the bigger probability as to how I think it looks. I would like to see a large decline. Are we going to get it? Well, if all we get is an ABC here, then no, we're not going to get it. Remember, what we need to see is a five-wave decline, because what I'm expecting is an A, B, C. If I don't get a five-wave decline off of this high, then I'm going into the alternative. Okay? Simple. But either way, one way or another, it does look like we do need some type of pullback. And lastly, the U.S. dollar. I'm not running out of time fast. U.S. dollar, can it have topped in an ending diagonal here? Yeah, it's possible. I still think this is more of a, this may just have been the top of the third wave of this five-wave C wave. If we start seeing more of a five-wave decline here, folks, then I'm going to start calling this the top of the B wave, and we're probably going to see a multi-year decline in the dollar. Okay? So that's where we stand. We're still in the quote-unquote topping phase. What are we now? Okay. Well, maybe 5 down. Let's take a look later. Let me take a look at your questions, because I'm pretty much out of time. I doubt I'm going to get to them all. I'm not going to have the time. Let's see what we got. Okay. Okay. Out of all these questions, I'm going to tell you, I'm going to make two comments. First, you guys can ask me from today till tomorrow, could this be possible? And I will tell you, yes, it's going to be possible, but is it probable? So anytime you ask me, is it possible? My answer is always going to be yes, but I'm going to have, is it probable? And the answer is no. The second thing is, at least in my eyes, the second thing I'm going to do is I'm just going to briefly go over the TLT because that was asked. TLT really has no difference. I think we're bottoming out here. No difference here. I'd like to see a lower low here. That would be my preference. This could just be a triangle fourth wave. I'd like to see a lower low. I don't know if we'll actually get that. I'd like to see a lower low. And if we hold 138, then I'm looking for the next major rally. Guys, I'm running out of time. Have a great day. I'll see you guys in the room.